the expanded child tax credit during the pandemic, millions of families received monthly checks, more money to offset the cost of things like childcare or food, just the basics, went away at the end of 2021. But there is a renewed bipartisan effort of bringing it back for good. Deputy Political Director Joe St. George takes a look at the emerging deal in Congress and whether it stands a chance of actually passing soon.
Well, it's that time of year when you may have the laptop out and you're reviewing your family's tax information before you submit it to the IRS. Well, Congress is looking at taxes, too, with a potential deal emerging that could really impact your family's pocketbook. This tax change proposal has been brokered by Oregon Democratic Senator Ron Wyden and Republican Congressman Jason Smith of Missouri. Both men play key roles when it comes to tax policy in Congress, and both want this deal to pass soon. Under current law, the maximum child tax credit is $2,000 per child, but only $1,600 of that is refundable when you file your taxes. The proposal would change that to $1,800 right away, with $100 increases until 2025. Eventually, the tax credit would be tied to inflation, like Social Security checks. Lawmakers behind the deal are eager to pass this, so families could get the benefits when the 2023 tax filing season begins toward the end of the month. In this Congress, though, passing anything right now this consequential is a tall task, and some congressional leaders have already signaled the deal needs some changes to get their support. There remains more pressing concerns, too, like avoiding partial government shutdowns. The $78 billion tax legislation also includes incentives for companies to build low-income housing, benefits for some semiconductor companies from Taiwan, business deductions for research and development costs, and tax relief for victims of recent disasters, like the train derailment in East Palestine, Ohio, last year. Joe St. George, Scripps News, Washington.
Let's start with the numbers here, though. It costs nearly $22,000 a year on average to support just one child, according to LendingTree. That's up 20% from 2016. And that's only for the basics: food, housing, childcare, healthcare. But parents, you know, there are the birthday parties. Soccer, you got to get a new coat because they're growing. You got to go to friends' birthday parties. There are so many birthday parties. I haven't even gotten to the car insurance part of parenthood, but we know it's coming. It all keeps coming. So what kind of change would this make if they do this tax credit? Brandon Arnold is with us now, Executive VP for the National Taxpayers Union. Brandon, as a parent, a few things, $200 might get you. I could think, groceries for a week, fresh fruit cost so much money. If you're a parent, you know that. A few boxes of diapers maybe. But childcare, that's way more than $200. Will $200 make a dent?
Well, I think it will. And, we're not talking about the same magnitude of an increase that we had during the pandemic when, as you noted earlier, the tax credit was plussed up from $2,000 per kid up to $3,600 per kid for younger children, at least. The problem there, of course, was sure, families needed that extra relief during the pandemic, but that also contributed to inflation. So what this tax credit increase does, I think, is a little bit more intelligent given the circumstances in the economy. It does ramp up those benefits over time, indexing the child tax credit toward inflation for all families. And like you note, for people that need the refundable portion of the tax credit, and those tend to be people on the lower rungs of the economic ladder, it does provide that benefit immediately where it's really, really needed, because those are the folks that are having the most difficult time dealing with high gasoline prices, high grocery prices, all of the things that you listed off when it comes to raising a child and sustaining a family.
Actually, that's what I was wondering about. Could you spell that out just a little bit more? Because I don't know. Okay, I'm not going to ask the tax guy whether he finds taxes confusing. Let me speak for myself. I find taxes so confusing. For people who don't have to file taxes, let's say, if you're a low-wage earner, how do they get the money?
Yeah, so it's a refundable tax credit, and that's different than just a standard tax credit. So a refundable tax credit, let's say you had $1,000 in tax liability to the federal government. If that tax credit is $2,000, it not only wipes out that $1,000 of tax liability, but you also actually get money from the federal government. So you get that additional $1,000 or up to that $1,000. So it actually is a negative income tax, is the way some nerds would talk about it, including myself. It provides benefits to people in excess of their tax liability. Again, that's going to help people that are on the lower rungs of the economic ladder, people that are really struggling to get by in a tough economy, because inflation doesn't care how wealthy you are or how poor you are. It hits everybody, whether you're at the grocery store or the gas station or what have you.
It just feels a little worse depending on how much money you have in that account, of course. So if we zoom out a bit here, I'm hearing both parties say these days, we need to help American families. Now, does that mean we're having universal paid leave? No, it doesn't. But you're hearing people say families are shrinking, meaning our workforce pool is shrinking. Taxpayers who are going to fund things like Social Security shrinking. Would something like this encourage people to have bigger families, have more children?
It could, and I think there's some built-in incentives in the child tax credit that are being preserved here that are important. For instance, you have to work in order to get this credit. You don't just automatically get it. So if you are healthy, if you are able to work, you have to be in the workforce, not just have children and get a check from the federal government. So that does encourage more people to join the labor force. And since the pandemic, unfortunately, we've had a lot of people drop out of the labor force. People who are able-bodied have decided to sit on the sidelines and not work. Now, listen, there's a lot of people out there that can't work for a variety of reasons, but people that can should go out and join the labor force, particularly at a time when labor markets are very tight and we need as many people working as we possibly can. But in terms of whether this is going to incentivize people to have more children, maybe, as you point out, it costs over $20,000 a year to raise a child, and that's even before taking in a lot of the additional costs that you ticked off a minute ago. So, $2,000 credit to offset the $20,000, $22,000, $25,000 cost of raising a child each year. I don't think that's going to move necessarily a lot of people in the direction of parenthood that weren't already pointed in that direction.
You called yourself, I don't know if you said nerd or dork, but let me call myself a stick in the mud here. Fiscal responsibility. Is this a good investment? Is it going to be paid for? Because we are already tens of trillions of dollars in the hole.
Yeah, it will be. And that's a great portion of this package here. The fact that it is paid for. It's a unique thing because typically when Congress cuts taxes, when Congress does anything, it tends to increase the deficit. And in this particular instance, we are seeing a pay for, and that is in the form of the employee retention tax credit. This was a pandemic era tax credit that was intended to help businesses, particularly small businesses, retain employees even at times when they were shut down. Unfortunately, that was abused quite a bit. Anyone who has an email address might have gotten an email that says, hey, there's this great tax credit out there. Let's take advantage of it. Let's rip off the federal government. We saw billions of dollars being ripped off from this program. So this tax package terminates that program earlier than it was intended to be terminated, which is a good thing. It's run its course. The pandemic is over, and there's really no need to have this credit on the books anymore.
Okay, Brandon, we have 40 seconds, so one more get off my lawn question here. Why does the system work like it does? The government knows how much you made. They have access, I presume, to all of these things. Your mortgage company sends it to you, and your bank account has tax documents, and your investments, and you have to go and collect these every year. They produce these reports, which I assume the government has access to. Why is it so complicated?
Well, taxes are just inherently complicated because the government sees a lot of what you do, but not everything that you do. They don't know that you might have made a contribution to a charity or to a university or to a church or so forth. So you need to have that information if you're going to take advantage of charitable deductions, for instance. There are a lot of things that the government doesn't know about, and in many instances, that's a good thing. We don't necessarily want the government to know everything that we do financially or in other aspects of our lives. So that's why one of the reasons why taxes are complicated. They got a little bit easier in 2017 with the Tax Cuts and Jobs Act, but you're right, they're still far too complicated, and there's a lot of work that needs to be done for tax simplification.
Yes, I did not make a donation to a university. Just let me get this done in 5 minutes, please. Brandon Arnold, thank you for joining us today. Some good information here. Appreciate it. Ahead on